Good afternoon and welcome to the Artisanal Spirits Company PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. Now I'd like to hand you over to Andrew Dane, CEO. Good afternoon, sir.
Afternoon. Thank you much, and thank you much all for joining and joining for our 23 results presentation for the Artisanal Spirits Company PLC. Both myself and my colleague Billy here to present and then take questions later on. So we'll start with a reminder of what SC is. We create and sell outstanding limited edition whiskies and experiences around the world. We primarily do that through the Scotch Malt Whisky Society. What we're going to do today is going to take you through an exec summary, some of the headlines of the recent results, then hand over to Billy to take through more of the detail of those results for 2023, and then hand back to me to start talking a little bit more forward-looking about current trading and also our outlook. So we'll start with some headlines on recent trading for 2023, and I guess what was pleasing was, despite challenging global conditions, to have still delivered revenue growth. That's 8% revenue growth for the full year, but in particular for me, pleasing to see an acceleration in that revenue growth during the year. So 12% revenue growth in the second half after 4% in H1. And that represents good progress, though obviously not at the level that we had targeted for the year. What we have seen is expansion of our footprint in Asia with the addition of new franchise in Korea, as well as the addition of Taiwan, helping to offset most, but not all, of the downside from challenges in China during the year. Alongside that, we also saw delivery of a huge range of strategic initiatives. We'll talk about those in detail later, but most notably, the sale of whole casks worth of bottles directly to SNWS members. We also saw strong membership growth across the Scotch Malt Whisky Society in its 40th anniversary year to over 40,000 members, as well as adding some real proof points to the significant and growing value of our cask inventory. That's the whisky stock that we own, which has increased substantially. We'll spend quite a lot of time today talking about that too. In terms of headlines as we look forward, current trading has been good. In January, we acquired Single Cask Nation, the US-based independent bottler, and that's a really positive start to life. Prop here of the first Single Cask Nation bottling being done at Masterton Bond, our own facility. First sales in February and first e-commerce release in mid-March, which sold out almost half on the first day, which is great. And that feeds into a positive start to 2024 with 10% revenue growth, giving us confidence in our full year EBITDA guidance for 2024. And that takes us on a path from low to mid to high single-digit margins over the next 3 years. And overall, continue to think we're well placed to deliver, and that despite a challenging 23, we've actually emerged in a much stronger position, increasingly well positioned for continued global growth in a sector that continues to be significant and growing in that attractive ultra-premium subsector of the market. Being the ability to add new markets and expand our footprint, as well as starting to get the benefit for the investment we have already made in the previous years into strategic initiatives, as well as a few of the other things that Billy will talk around, like spirits, and wood, and venues, and Masterton Bond. So overall, gives us good confidence. So that's it. That's the headlines. Now we'll take you through a quick recap of the business, hand over to Billy for 23 results, then talk about our model and why we have confidence in our ability to deliver long term. So first up, this is a refinement of what we've always talked about, which is at the heart of the business is our purpose of captivating a global community of whisky adventurers. And we do that, as I said at the start, by creating and selling outstanding limited edition whiskies and experiences around the world. Now, ultimately, we have an ambition to create a really high quality, high profitable and cash generative premium global business. And we're making progress against that, against our 5 pillars: whisky, membership, experiences, new brands and audiences, and people. And you'll see our progress across many of those during the course of this session. What has changed is our portfolio of brands has expanded. But it's really important to note that at the heart of the business now and in the future is the Scotch Malt Whisky Society, founded in 1983 and now with over 40,000 members, providing those amazing, outstanding liquids and experiences. But really glad to be able to welcome Single Cask Nation into the fold as another incremental and complementary fit with the other brands that exist alongside J.G. Thomson. So since it's at the heart of the business, just a quick recap of what the Scotch Malt Whisky Society is. It is a truly global business with 2/3 of its sales outside the UK, selling primarily directly to consumers, both online as well as in member rooms. The small balance is into a network of outstanding partner bars around the world. It's premium, limited edition, typically single cask with maybe only 200 or 250 bottles, with extensive whisky coverage, and that growing global membership is highly engaged. So what do? We're not a distiller. We buy from a wide range of distilleries, both Scotch malt whiskies, other international malt whiskies, as well as rye, bourbons, and some other spirits that we know members love. We mature those casks and now own over 17,000 casks ourselves. We bottle them at our own supply chain facility, and we bottle those under our own brand, Scotch Malt Whisky Society, and sell those bottles exclusively to members. But it's about more than just outstanding liquid in a bottle. It's the experiences that go with them, events, tastings, as well as our 4 member rooms in the UK, 2 here in Edinburgh, 1 in Glasgow and 1 down in London. And then finally, before I hand over to Billy, I thought it was worth just pausing and reflecting on the last 3 years and the progress that's been made against what we said we would do at the time of the IPO back in late May 2021. We set ourselves the target of doubling revenue to 30 million by this year. By last year, we'd already grown 56%. We wanted to grow our membership base in major markets, where we've grown by 57%, primarily driven by international expansion. We have enhanced our e-commerce with new US website and new UK app, as well as our route to market capabilities with new joint venture in Taiwan in August, franchises, most recently in Korea in April, but over the last 3 years in South Africa and Mexico as well. We've driven up margins, which are up by 5 percentage points since pre-IPO, as well as growing that cask inventory of outstanding and unique liquids to now over 17,000 casks with almost £500 million of future retail value. We've used the venues and the bars to bring to life, and not just growth in those venues, but more profitable venues, as well as adding to the premium spirits brands with the creation of J.G. Thomson in late 2021 and the acquisition of Single Cask Nation in early 2024. So now I hand over to Billy to take us through some of the detail around the 2023 results.
Thank you, Andrew. So on the slide at the minute, you'll see really some key indicators that tell us how our business is performing. We've got the financials on the left-hand side, we've got members' behaviour and membership in the middle, and what we call the kind of inherent value within our business. So I'll go through each one. But if we start in the middle, the SMWS, Scotch Malt Whisky Society, is at the heart of Artisanal Spirits Company. And at the heart of Scotch Malt Whisky are the loyal and engaged members that sit within that business. So we're particularly pleased that we've seen a 10% increase in members year on year to just over 41,000 in our 40th year. And at retention level, it's still a really high benchmark level, 74%. It's above pre-IPO. It's slightly down on prior years, but that's still 74% of our members will remain with us, which is still a really good benchmark score. With regards to lifetime value, that has seen a slight dip year on year. That's predominantly driven by the market in China, which I'll come on to a bit more in a minute, but still 25% above IPO levels. And what that middle section is telling us that members are engaging, they're joining, they're staying with us, and they still appreciate the product and the experience that we provide. So that's fantastic. Then what comes with that is our financials on the left-hand side. So again, we've grown revenue by 8%. Certainly not the 20% we've seen previously, but this is in a year where there has been some challenges, particularly within China. But 8% growth goes to show, which will come in a minute, is diversification of the revenue of this business. which is really positive, and where we're looking at opportunities in the future. And with that revenue growth comes 9% gross profit growth, and alongside that, contribution growth. So that's really positive. And on the right-hand side, I won't go too much into it. There's slides further on, but essentially, as a reminder, within our books, there is a net book value of cash stock that we hold, around £25 million. There are then two external points that we can measure that against. We will always hold those cash stock, but through our a net book value at the cost we paid for it. And against those, we have, through a revolving credit facility, a bank valuation carried out annually, which gives us a better value of what that is, because we are working with an appreciating spirit asset. And then in the last year, let's go into a bit more detail. We've sold cash to members, and we've agreed a new facility with Veravinum, which gives us what we believe is a more truer market valuation. So on there, you can see 4.8 times. I won't go into that too much right now. We've got further on that to come in a minute. But ultimately, cost in our books, worth more as an appreciating spirit asset. I'll come back to that. Thank you, Andrew. So I think the key point to note here is the continued diversification of our global revenue. And some of the key pull-outs here would be, we've seen venues grow almost double digit at 9%. Again, they've continued to recover post-COVID. And I think the key importance for us is last year and arguably into this year, we have been in a high inflationary environment, cost of living challenges. We've got people who want to attend our venues and want to experience what the SMWS can provide. So that's fantastic. So we continue to see the key importance of our venues, and we expect that to deliver this year as well. One of the key growth areas you'll see in our trade cash sales. We have done this to a much lower degree in prior years. However, it was always a strategic objective of the business to utilise trade cash sales. It's something that exists within the whisky industry now. It's an opportunity for us, for example, to balance our whisky portfolio. If we perhaps got stocks of whisky, whether it be aged, distillery, maturation type, we can sell those to then rebalance and purchase against that and make sure we have the right optimal balance of stock going forward. In terms of other key points there, it'd be remiss of me not to mention Asia decline of 14%. That is driven by the macroeconomic challenges within China. But again, the positive in there is where we've seen 30% decline in China driven by those macroeconomic conditions. We've offset that. We've got the new franchise in Korea, we've got the new joint venture in Taiwan, and we've had significant growth in Japan. So there's still lots of positivity within that, and that diversified revenue portfolio will help us achieve our future ambitions. From a P&L perspective, we did deliver an adjusted EBITDA of £0.1 million, which perhaps is not as high as the expectation. Again, still shows our ability to turn a profit in challenging times across that diversified revenue. And if you look at the blue highlighted columns to the right-hand side, the important bit to call out is really the momentum coming from half two. So in half two, we delivered £1.9 million of adjusted EBITDA to deliver that overall 0.1. Now, within that, there are elements of timing. You can see that particular strong revenue delivery. Some of that is timing, but what the key importance of the second half, as you'll see in marketing and payroll and other overheads, are key cost base within the business. All of those areas have reduced against the half one, and they're exiting half two at that level. This is a future run rate. So this gives us confidence that coming from a half two delivery of £1.9 million of EBITDA, a diversified revenue, controlled cost base where significant investment has already been made, we can deliver what we want to deliver in terms of consensus delivery with regards to EBITDA going forward. From a balance sheet and cash flow perspective, we have still continued to have a very strong balance sheet. We've got £18.3 million of net assets, supported by cash goods of around £25 million, as mentioned. If we go on then to talk about cash flow, again, the key things for us in half two, it was a challenging half one. In half two, we delivered significantly. Not only have we delivered operating cash flow, a positive operating cash flow in the second half, but what we will see is that net cash investment in Spirit has peaked. So as a business, as we start to deliver profit and cash generation, that cash Spirit spend as peaked will start to deliver more and more operating cash flow that can allow us to drive cash to further invest in the business and drive further growth. Okay, so I mentioned couple of minutes ago about I mentioned 2 seconds ago about the strong balance sheet that we have underpinned by our cash stock. What's key to pull it out is the inherent value within our balance sheet. So I mentioned we have cash stock of £25 million within our balance sheet. What I'd like to call out is a specific example over the last 12 months. So we entered a new facility agreement with Verivinum. The facility agreement with Verivinum allows us to unlock some liquidity locked within that balance sheet. And the benefit of this facility with Verivinum is they look at the casks and spirit within a balance sheet and give us a truer market valuation for what they're held at. So what's important to note in this example is for the tranche of casks that we delivered in H2 in 2023, we selected a portion of casks that had a net book value of around £800,000. So that was a value that sits within the 25 million in our balance sheet. From a bank perspective, with our revolving credit facility, they do an annual valuation. That annual valuation is relatively simplistic. It's still agnostic. It takes this is a year, this is a rough value per LPA. They valued those casks at 1.3 million, so around 50% premium to net book value. Through this new facility with Verivinum, they're able to take those casks and through many data points, most importantly external data points, they valued those casks that we had in the books at £800,000 at £3.8 million. So that was almost 5 times the level of net book value. Now, what that allows us to do is draw down and invest in our business appropriately. It gives us the optionality and flexibility, and it allows us to draw down at a much better rate than we previously have been. And it's important to note that facility is at the same benchmark levels of cost as the RBS facility as well. So to kind of summarise where we are, we have a net book value of £25 million, mentioned a couple of times now. Ultimately, to the right-hand side of this slide, we want to sell that whisky within bottles as part of our business model. And within that, there's around circa, based on the stocks we have currently, around £500 million of revenue, which will deliver somewhere in the region of £300 million of gross profit. But what's also important to understand that you can't see from looking at our balance sheet necessarily, but you can through pulling out that information. Through cash sales we've made to members of around £0.3, £0.4 million last year, that's 4.5 times the net book value that we hold at cost. And through the arrangement with Verivinum, the one I've just mentioned, that's 4.8 times. So the key summary in here is we believe in our business model, we believe in our ability to engage our members, but underneath all that, it's underpinned by an inherent value that really does grow the valuation of this business far beyond what it's currently held at. And as a closing remark from me, again, loyal, valuable, growing global membership. We've got over 41,000 members, annual contribution of over £300 per member, and a lifetime value of almost £1,200. This is not a directional metric for us. What we want is loyal, growing global membership. So we'd love that membership number to be 50,000, 60,000, and what they're spending based on that. But what it ensures it does is it allows us to make sure that we're giving the members what they want. We've got that retention at the right level, and this is something we'll keep an eye on going forward.
Thanks, Billy. So as Billy sort of alluded to at the end there, it's that loyal, valuable, growing membership combining with the unique, outstanding, award-winning products in a high-margin, direct-to-consumer model that delivers long-term value for the business. So that's a bit around the kind of financial delivery, but I thought it was also worth just pulling out some examples of the strategic delivery during the year, and there's been a lot. And I won't talk through all of these, but here you can get a sort of insight into the kinds of things that were delivered during the year. Between Masterton Bond being fully operational, cash sales, trial of our prestige products, subscription services, new app in the UK, those subsidiaries, the acquisition, and all of that, and a lot of people development within the business too. So lots has been delivered and paid for last year, and now this year we get the opportunity to take advantage of those, to make the most of the new membership in a bottle product, the subscription service, the app that was launched at the very tail end of last year, etc. But if we pick a couple of them and really bring them to life, first of all is really pleased to have completed the refurbishment of the spiritual home of the Society at the Vaults, actually directly above our head here just now. SWS has had a presence here for just over 40 years, and it's great to now see it back as the kind of international standard in whisky bar that it is. It's a fantastic venue. For those of you who haven't had a chance to visit it since the refurb, I welcome you here with open arms. It's really been fantastic and very well received by members and the wider public and industry since it reopened around September time last year. The other one is Masterton Bond, which is now fully operational, having produced over 200,000 bottles to date. Casks, it's about 85% full, which is pretty much at its operational capacity. All of our UK e-commerce fulfillment, as well as our international shipment fulfillments, are being completed there. And as I mentioned earlier, our first single cask nation bottlings is also now being done on site. So that site is now fully operational and has been since late May, early June last year. So the benefits of that starting to come through last year, which is great to see. And finally, on that single cask nation acquisition, buying the trading assets of the business, which is already cash generative, expected to be bottom line profitable, not just EBITDA profitable from year one. And a business which is really a great fit. It's also looking to captivate a global community of whisky adventurers. It's a business that purchases primarily single cask whiskies, as well as other spirits, delivers in the US in particular, as well as other international markets. And that American whisky market is one which we think can continue to grow and expand. And it really is complementary and incremental to our existing business. Scotch Malt Whisky Society in America finished very strongly last year with circa 30% growth in depletions in market in Q4, and that's continued with around 10% growth into the start of 2024. So that's really good, and it helps prove the opportunity in that market. Really pleased for Jason, Joshua, and the team there to have been awarded the prestigious Independent Bottler of the Year award in the US at the Icons of Whisky Awards in Kentucky earlier this year too. So that's a really good fit, and as I say, already off to a great start so far this year. One of the other things that we often are asked to sort of bring to life a little bit more is the marketing strategy around the Scotch Malt Whisky Society. So I thought I'd set out two things here. One, which is the basic principle of how we go about it, as well as a couple of case studies to sort of bring it to life. So at its heart is the brand positioning, and then in how we talk to members, it's about recruiting members, retaining them and engaging them. And it's across those recruit, retain, engage. That's how we approach our marketing spend and delivery. Now, what that looks like might vary by different markets. So if we take an example in the US of a member who joins through, let's say, as a gift for Father's Day, marketed either through traditional digital channels or in gift guides. Here we've got someone where the first stage of recruitment has happened as a gift, but to try to engage and retain them, it's an education piece. So the US team actually phones each individual new member through that process and has an initial call with them to explain what the society is, maybe give them an opportunity to ask questions, maybe try to see what kind of whiskies they're interested in, try to see if there's an opportunity for them to buy the first bottle from us, because we know that the sooner people get liquid to lips and try some society whiskey, the more likely they are to get the proposition to stay for a long time. Another path, to contrast that in the US, might be someone who has joined from a corporate tasting event. So some there we offer with the ticket price of those events, maybe $150, and that will include year one membership. So in that scenario, the recruitment has happened through a channel where that new member has actually had an opportunity over the space of an hour and a half to maybe a couple of hours to taste some whiskies, to hear about the society. So there, the targeting and onboarding journey around engagement retention is getting them to buy their first bottle, to spend their own money for the first time, to come to an event in a local partner bar, or to buy their first bottle online, and helping them through that process. So the paths differ across markets and recruitment channels, but that principle of brand underpinning with recruitment, retention, and engagement driving all marketing decisions and spending. But then look ahead and think about the loyal, long-term global growth opportunity. It really is a significant and growing addressable market. And while the full 2023 data isn't out yet. I have seen the headlines, and the headline is that the premiumisation trend has continued, and there is continued growth in the ultra-premium Scotch whisky market into 23 again. But even before that continued growth, it was already over an $8 billion global market, really focused on a small number of key markets that we're already present in. So you can see from the chart, makes sense that the new markets we added were Taiwan and Korea. If you were to extend, as well as changing our partner in Malaysia, if you were to extend that graph, that table down and look at the markets that we're not present in, that are significant and growing markets, you get places like Vietnam, Brazil, Nigeria, India. Those then become the next areas to look at, but it needs to have the size, it needs to have the maturity of the whisky market, it needs to have a regulatory and financial framework that makes sense, but that becomes the next pool in which to look at as we look to expand further. And that expansion being supported by, as I say, continued premiumisation. Just as remember, everything that we do across ASC is in that ultra premium and above price points, with most of that being driven direct to consumer through e-commerce. So, to wrap it up, in summary, current trading has started well. The acquisition of Single Cask Nation helping build the group and contribute profitably to the growth this year. 10% revenue growth even before that real contribution from Single Cask Nation, giving us confidence in delivering full year profitability, as well as that path from low to mid to high single digit EBITDA margin over the 24, 25, 26 long range plan. So well placed to continue to deliver through that. And it's our actions in this space around making sure that the SMWS range is still fit for purpose and delivers what we need, that the quality of those releases are still outstanding and amazing around the world, driving value from the private cask sales that Billy talked about. And that's everything from our 50th anniversary programme, where casks initially cost between £4,000 and £5,500, and someone gets to be part of the maturation and journey of a cask through its 10 years, and it will be bottled in 10 years' time. All the way through to the other end, where people are buying casks that might cost tens of thousands or hundreds of thousands of mature spirit that's ready to go. But what's important in both of those is it's the sale of a whole cask worth of society bottles to a society member. We're not going anywhere near the whisky cask investment schemes. This is about people who really want the whisky, and that's some good progress there. Replacing the till system, the EPOS system across the venues. We've already added Single Cask Nation and moving office in the UK to reflect something that matches the ambition for our people. But having done that in such a way that it requires no cash outlay up front. So found an office that was already fitted out and all the rest, so there wasn't an upfront requirement to spend money on that, but also one that has the smallest possible EBITDA impact, and certainly less than 100k of EBITDA impact, but giving people the space that really reflects the importance of people to our success. So overall, in a good position, building on the strategic initiatives that were already delivered last year, as well as this year, gives us good confidence to deliver. So that brings an end to the main part of the presentation. I'll now go over to questions, and I can see that a few have already come through, so I'll maybe start to go through them. But if you do have any more questions, please feel free to keep sending the questions. I'll be happy, Billy and I'll be happy to talk through those. The first one was a question about why the share price has dropped over 50% in the last year and why. And I think there's two things, maybe three things to comment here. The first two in relation to the share price itself. We are, in some ways, subject to the vagaries of the market itself. The AIM market is for smaller, and the liquid stocks has suffered a lot. I mean, since the time of our IPO, I think the market is down by over 40% as a whole, the entire AIM all-share index. The second is that during the course of the year, as I alluded to at the start, while we did grow last year, it wasn't quite at the level of growth that we had targeted for the year. So while we got the momentum back in the second half of the year, we weren't quite able to recover and deliver the full amount that we'd wanted to in the year. And that's the first time since IPO that we haven't been able to sit here and say we've delivered everything that we said we would. So part of that's fed in. But really the important thing is, what do we do about that? And Billy and I's job is very clear: to deliver the results, to deliver on the strategy, and make sure the business is well placed to take advantage of long-term growth. And trust then that the share price will follow through thereafter. Second question is around trade cask sales. Who are they to, and what does the customer typically do with the barrels of spirit? So these are to a small number of trusted industry partners. So some of the same people that we're buying casks from. So sometimes they are surplus to their requirements. So that can include swaps back to distilleries that have sold us them before. It can be into others in the industry who are using those casks, typically to put into bottle and be sold elsewhere. But we're only working with a small number of people who we trust. And again, those are not going out into kind of whiskey cask investment schemes. These are back into people who we're happy trading with. Next question says, the acquisition of single cask nations seems much aligned to a premium focus. How do you see this enhancing your market position and help push the revenue target to double 2025, particularly in the US? So single cask nation, as I say, is very much aligned. And what's really important is complementary and incremental. So it's, I mean, as the bottle says on it, by whiskey geeks for whiskey geeks. It's a wonderful brand that's been built over the last 10 years through a combination of Scotch whiskey, American whiskies, and other spirits. I think the opportunity for us is twofold. One is to help bring more support to Jason and Joshua and the team there to deliver what they're already doing. But also, we've always talked about an opportunity to do more in the American whiskey market. And I think that in that space, Single Cask Nation gives us the opportunity to create and sell some outstanding American whiskies into that space, while continuing to do some of what they're already doing. The other thing to note is that when we've started some of the initial work around overlaps in customer bases, Single Cask Nation's roughly 10,000 mailing list, and the Scotch Malt Whisky Society America is roughly 7,500 members in the US. The overlap is less than 5%. So that says two things. One, it evidences the fact that the propositions are adjacent but not overlapping. They are distinct propositions playing into slightly different angles in the same space. But the second is, given that both are present in the US, selling outstanding, primarily single cask, limited edition whiskies in the US market, when the overlap is less than 5%, it shows just how enormous that market opportunity is. The next question is, with the membership base growing, are there opportunities to cross-sell or upsell? Of course, that's an area that as a business, we're always looking to make sure that we're looking at opportunities, but particularly when you're operating with a membership base, it's really important that we're only bringing things to people that we really believe in, that we really think are things that they would be interested in, that we can bring extra value to. Where we can do that ourselves, for example, the 50th anniversary program, we'll do that. Where it's something that we think people would really love to do, but where we don't have the expertise ourselves, let's say whiskey tourism, partnering with the right people to bring SMWS members opportunities they can't get elsewhere without distracting us from the core business. The next question is, how much stock does Single Cask Nation have, and do you envisage increasing it like you've done for SMWS, and how would this be financed? So first thing to note is Single Cask Nation is a much smaller overall beast than Scotch Malt Whisky Society, as well as obviously within its portfolio American whiskies, which are lower maturation times. So overall, is there a need to increase it dramatically? There's not. It did come as part of the acquisition. Most of the upfront payment was underpinned by assets, including cask inventory. So certainly plenty to get us going, as well as acquisitions that ASC had already done, envisaging this deal going through. So there's not a huge requirement to invest a lot of money into spirit. For this year, for example, the net outflow will be close to zero. So not a lot required there. Next one is, you mentioned expanding into new markets in Asia. What does it take to penetrate the market and sustainably grow from a resource and cost view? It's quite a hard one to answer because it varies quite a lot by market. So maybe I'll give a couple of examples. In Korea, in fact, when we launched in South Africa and Mexico, the way we actually launched franchises in those markets was we worked with a partner bar. So the partner bar owner in Cape Town or the partner bar owner in Mexico City said, we'd like to operate the franchise in your country. Very low risk, someone who already knows SWS, but typically a lower take-off rate. In Korea, we actually did a beauty parade of potential franchise partners, and in FJ Korea found a fantastic partner who just got the society, got what we were trying to achieve, and have done a fantastic job. Recruited their opening year's target in the first hour, and have really got what it takes there. So it varies by market. When we're looking at new markets, so if we think about Asia and think about India, it's not really one market, it's a whole plethora of individual states with individual regulations. So while the overall market is big enough, what we're looking there is it mature enough? Do the regulations support it? Can we actually operate? Do they support single cask spirits or small releases or high ABV products? And do the commercials work? So there the import tariffs are pretty punitive, but potentially there is still an opportunity. So it does vary by market. But we are only, for 2024, ruthless focus on delivering this year's results. So we will only be adding new markets at a time that they can contribute profitably to us. So we will start discussions. India is a good example. We're talking to partners now about opportunities, but we would only launch them when we're confident that it can deliver value right from the start and sustainably grow from there. Okay. And then the last one, will visits to Masterton Bond be possible for shareholders? I'm pausing because conceptually it's not something that we're actively looking at. As you know, lots of the romance of the Scotch whisky industry reflects lots of wood and lots of oak casks. Masterton Bond is a really effective operating facility. So steel and steel racking and bottling and so on. So it's also a fully operational facility. So from a health and safety perspective, high storage of pallets, cask racking, forklifts moving around. So it's not set up for visits by shareholders. We have occasionally done events where people can come there once or twice, and we would keep considering those as options, but it's not really a destination like the visitor centre at a distillery would be. We'll answer that. Anything else you'd like to add at this stage, Billy?
No, nothing more. Good questions. I think, as Andrew mentioned, our short-term aim this year is ruthless delivery of results, and we've had a positive start to the year, and we'll continue that momentum from the second half of last year also.
Great.
Perfect. Andrew, Billy, thank you very much for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of the Artisanal Spirits Company PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.
Thank you very much, all. Thanks.